All right, let's talk a little about the markets, the Fed. Yeah, Jules is not here. I'm actually working from the house office, the home office today, so I got no dogs here. Nice and quiet. Pain in my ass. Hold on. All right. So let's talk. Let's talk market. Obviously, we'll just touch base on what's been going on here tomorrow. The Fed, and we spoke about the taper. I don't think the actual taper has is going to have a big influence, but I think, especially the way the markets reacted and some of the markets around the globe, there's a chance for some movement and some volatility. All right, especially considering we've run so much. The funny thing is I think everybody's hoping for a round of selling for an entry, and usually when that's the case, you guys know how that ends up, right? But we'll see. It's been mostly in the bond market primarily, where most of the volatility has been taking place, from, again, across the globe. The central banks starting to shut the spigots in a sense. Okay. So, but there's always that risk. Okay. And especially, that we've come a pretty long way. So you want to keep some dry powder, obviously, and look to take advantage of any selling. The thing, here's what I'm looking for, and you guys know, more so than movement out of the overall indices, these events, whether it's the Fed and an election, they have a tendency to kick off major rotation and sector focus. Okay, not just individual sectors, but even large cap to small cap and stuff like that. If you remember the election, when Biden won the election, you had that massive rotation into small cap and value out of growth and tech, right? And it was one of the most aggressive rotations we've seen in a long time, especially going in that direction. And people initially didn't think it had any lasting power, but it just, based on my experience coming out of these events, it really gets things going in a certain direction as far as focus is concerned. So that's what I'm looking for here. Is I'm looking to see if the type of action we've been seeing, both price action and flow, continues. And what I mean by that is we've been seeing a focus on individual names, more of that under the hood type action that we've been talking about for a while, right? Not just the more speculative names, right? We all love when these $2-3 stocks get junked up, and you can have these crazy runs intraday or in a day or two, but just more so on names that the average player out there is not aware of, not involved in. You don't have that crowded positioning. This rally initially got started, you had a lot of the major names really pushed to the upside. Okay, then that scattered up a bit, right? Like you had, going into earnings season, you didn't just have all of FANG buck higher, right? You had parts of it. You had Netflix was strong, Google was strong, but you had names like Apple and Amazon, which went in the other direction, right? So preferably what I would like to see is more of that, and possibly to the point where it even weighs on the overall indices, meaning the S&P 500 and the NASDAQ struggle to the upside. Okay, so you got that bullish bias, but it's really not worth paying attention to the indices per se, but under the hood, you really get some outperformance in individual names and possibly a breakout in the small caps, which is another thing we've been talking about for a while. The problem I have with the breakout in the small caps is twofold. One, it is so effing obvious. You know what I mean? Everybody sees it. Everybody's aware of it. And usually that doesn't mean that it can't break out or it can't, be it can't turn into a positive trend. But what can happen is there could be some violent shakeouts in between, right? Lure everybody in off a breakout and then reverse it on them. So that it gets tricky. When so many eyeballs are on it, it gets tricky. And that's what worries me about that it may not be as easy as it looks, because people are already talking about it already. But there's other things, even like today we saw action, and they're degenerate ETFs, but they definitely fit the bill. Look at this here, right? This is something we spoke about too recently. The Labu, right? The biotechs. And a lot of people think this would propel the R2K higher, okay? Because it's a big makeup of the Russell, supposedly. We've heard that before, okay? But, even here more so, you could even get more outperformance here than you would get in the Russell. Maybe the Russell is choppier, a little more volatile at first, but you get some outperformance in a Labu or an XBI. This Labu today, they played the Jan calls. We'll look at that in a bit. And XBI also caught some bullish activity. All right. And, these ETFs are made up of names, and there are names that go along with this ride if this does indeed pan out post-Fed. So that's, again, coming out of the Fed meeting, I'm not really paying attention to where the dot plots are or any shit like that. I'm looking to see where sweepers are focused, because here's the thing too. And if you guys remember, those of you who pay closer attention to the flow, the last meeting, Jackson Hole, if you remember Jackson Hole, this is really when this underbelly type action really started to get going, if you remember, right? And we were talking about it then. Coming out of Jackson Hole, there was a pretty obvious focus on a lot of these under the hood type names. All right. So hopefully we see some continuation. I know a lot of you, like myself, like that type of action out there, because, it's only so many times you can buy Google before, you're either holding it or selling it, and it's done, right? The egg is hatched. When you get this type of action, you're looking for new sweeps and new names. And trust me, there are a ton out there. There are a ton of stocks that haven't participated in what the indices have done for so long. All right. So there's going to be a lot more setups and stuff like that. And the beauty of it, you're not tied to what the indices are doing. You're not focused on, oh shit, futures are down. That means, this thing's going to be down today. It's not as easy as that. It's not as easy as that. It becomes more of a stock picker's market. So, if you have, or if you feel you have an edge, like we do at sweeper activity, it can be a lot of fun finding new names. All right. That would be the best case scenario coming out of the Fed. Okay. Worst case scenario for me would be just an absolute melt up, where things get out of control to the upside, reel everybody in, and that would be probably the last song to play before shit hits the fan, and shit hits the fan means at least probably a pretty violent correction. You'll probably, if that does occur, you're going to lure in hedge funds. We'll look at that in a second, because hedge funds have been on the sidelines. They have not participated in this recent run off the lows at all. The Merrill Lynch client fund flow came out this morning. Hedge funds were sellers. Everybody was sellers, matter of fact. All right. And it goes to show you that sentiment's not always tied to price action. Yeah, a lot of the shorter term tactical sentiment will get heated when you go up too much, too fast. Okay. But on the positioning end, sometimes a lot of times players try to outsmart the market, and the market has a tendency of getting them involved just at higher prices, right? That forced buying. All right. And that goes back to that Goldman piece that we discussed. I think it was the last time, or it might have been 2 weeks ago. Goldman came out with a piece talking about how there's a high probability melt up scenario coming out of this last recent pullback. Why? Because the players just didn't have, players, systematic funds, hedge funds, they really just didn't have as much exposure as they should have if this market was to push higher without them. Okay. Now, hedge funds, they make decisions ultimately until they're forced to buy because their clients are going to leave, right? If the market continues higher, they're not involved for a period of time. Why would their clients stick with somebody who missed a rally, right? You're not going to pay those type of fees for that. But these systematic funds, okay, which follow trends, which are tied to volatility, there's no decision or emotions that are involved there. Okay. When they need to ante up and put on exposure for whatever reason, they just systematically have to do it. And that's primarily been, in my opinion, the big driver of equities here, of the market here, has been that, and also an uptick in retail buying, which has been dead for a long, long time. Okay. And depending on what bank or brokerage firm you're looking at as far as retail activity, it's all different, but there's definitely been an uptick in retail buying. Not to the point where contrarian bad, we're not at that point yet, but in a good sense. All right. So the good scenario coming out of the Fed would be just a continuation of what we're seeing. Okay. And that means we just focus on individual names, right? Good looking spots, names that haven't exploded yet and are catching aggressive sweeper buying. Okay. And in the meantime, while that occurs, maybe you get some cooling off in some of the sectors out there. That already has started, believe it or not, even though the market hasn't come down at all. Okay. There's already some breathing going on. And that could open up some windows there. The bad case scenario would be just a complete melt up type case where, I don't know about you guys, I don't really feel comfortable holding on to much of anything because you really don't know when the music stops. That's the problem. So you got to try to be quick. It's almost like playing musical chairs, and try to get out unscathed. That type of scenario. Okay, as far as weakness, in my eyes, that's a good thing, and that's a perfect segue to look at what I wanted to show you guys. Why am I not including a sell-off from the Fed as being a bad case scenario? Because of this. Let's go here. Oh, I don't even know. I think I have a more updated one too, but let's see this. Maybe I spread it out. Are you really going to play with me now? Are they really going to play with me now? Here's what I'll do. Hold on. I'll get an updated, because I think it's even more updated than the last time I did here. Oh, I got to take a screenshot. I'm not too good at this. All right, so here is hedge fund equity exposure. Whatever. There we go. Okay. So here we are. trying to outsmart the market here. Again, for good reason, right? For good reason. Market continuing higher. There's some risk out there. They feel anyway. Some people see it differently than they do. Maybe they're worried about inflation. You probably want to own stock in inflation scenarios anyway, but whatever the case, okay, they are selling. Well, they've been selling as the recent pullback bottomed out, okay? As we hit lows, you had a little bounce. They sold into that, and they just continued to trim exposure into this move, okay? So if we do get a little round of selling to come out of this Fed decision, right? You get a little bit of a pull. Where's this going to go? If this is going to flush them out even further to the point where they get net short, we want to be all over that. Not even a question. Not even a question. All right. So that's why right now the weakness doesn't really scare me much. Okay. Again, my biggest fear is the market continues higher, and then it doesn't. When these guys are forced to get long, it happens quick. It happens quick. All right. So that's the main reason. Okay. And this is a reason why, again, you guys know I don't like chasing green as much as anybody out there, and if, to be dead honest with you guys, if there wasn't the type of action in the market underbelly and all these names like there has been, I'd probably be sitting on my hands right now as this market's pushing higher and doing absolutely nothing. Because I'm not going to chase the indices up here, that's for sure. But this is a bullish backdrop here. You know what I mean? It may not be over the extreme short term, right? This doesn't tell us that there can't be a little profit taking and weakness with a market that's up 13 out of 15 days. But when you do get that weakness, you want to lean bullish and look for opportunities while people are getting a little feared up. All right. So the other thing I wanted to show you guys, and I like when it all confirms it, because then what you're looking at is legit here. This is from Hedgehopia, the guy on Twitter who does a good job of every week measuring how hedge funds are positioned in the futures market. Okay, now granted, there's a lot of hedging via futures, but you get a pretty good idea when you have an idea of what they're holding as far as equities are concerned, and then compare it to what they got going in futures. All right, as far as the S&P 500, you can see here they've been holding a little bit of exposure, then net short a little bit, nothing major at all. Like, this is when they get long. Okay, so they got nothing going on, small long position in the S&P futures, right? But they have zero going on in the NASDAQ. And that's been one of the bullish things for quite a while now, right? They've actually been more short, if anything, than anything else. Okay. And if you want to look at the Russell, they are or have been short out their eyeballs. Pretty notable short position there. So you can see where they stand and what the pain trade may be for these guys with this market pushing higher. Okay, this came out today. All right, and if you look, let's just go to and what Bank of America Merrill Lynch is talking about. They're talking about how signs of bigger than usual selling could be related to tax loss. They're locking some tax losses, but for whatever reason they are selling, as the market continues higher. All right. And if you look here, can I blow this up? I don't think I can, but I'll circle it. Look here. Right. So you got institutional selling, hedge funds selling. You got a little buying on the retail end, and then you got buybacks. All right, rigging the market. And if you look up top here, it gives you an idea of what they're buying on the buy side, ETFs, right? And then as far as sector equities, they're not buying a thing. They're not buying a thing. Where is this is, let's see, this is in ETFs, okay? And here are the sectors here. Okay, and this is ETFs. This is not even the names where they did no buying. Healthcare is the only thing they really bought. A little bit of energy, everything else, no interest. Right? And in the ETFs, this is the big thing driving the more recent run up in a lot of these growth names for a while now. Right? The rotation we've been discussing week in, week out from reopening and cyclical names to growth names. Okay. I wanted to show you one more thing. Hold on, I'm trying to remember here everything. Nope. It's got to be an easier way, Christ. I usually do 4 week. Let me see. Yeah. Wanted to show you guys the. That's too much of a search there. Hold on. How about this? You got to be kidding me. Oh, here we go. Yeah, I tried with 2 E's. Okay. So this was the other thing we were looking at Sunday night. You guys remember? Okay. This is just, not risk on. Okay. Right. Bank loan, utilities, MLP, emerging market debt, REITs, healthcare, municipals. It doesn't even matter from this point on. Growth, they finally got a little long, but look at this. Okay. So even on the ETF side, where they've been doing more buying, they had no exposure at all to any risk on assets. Nothing. And what you would like to see if we can get a little bit of cooling off within the sectors, you would probably like to see energy and materials mellow out a little bit, so we can get even sector sentiment down to even more neutral area, and then probably prudent to start looking, here in these groups. Right? If you guys remember what's been here? I mean, you had growth exploded, consumer discretionary, thank you, Tesla, explosion, industrials, explosion, everything that they end up getting net shorting and, popping like popcorn. All right. So if you can get a little breather, crude doesn't want to cool off, but if you could get a little breather, the energy names though have been a little bit, we've been getting a little breather there. All right. But that's a place to look soon. If not, start looking now, but soon. Okay. Tech, like we hear a lot about crowding in tech. Yeah, you can make the case for 4 names. You really could, all right? 4 or 5 names. But as a whole, I'm not buying it. I'm not buying that Tech is 1999-ish. Yeah, you would not see this in 1999. No shot in hell would you see tech go from net short to barely even long with the Qs at highs in 1999. Tech would be here. So I'm just not buying it. I'm not buying it. All right. So again, this is not risk on. Okay. This is not risk on. All right. And just so you guys know, I want to make it clear because not a lot of you, but sometimes I get questions because people get confused on time frames, right? What we're looking at here is kind of more of a backdrop. Okay. It's not that, oh, look at this. We're never going to have a pullback again. Okay. We can see a pullback. This has nothing to do with anything. What this is telling us is that if we do see a pullback, okay, we want to lean bullish into that pullback because there's just not enough supply. Nobody owns anything. You understand? And the likelihood is the probability is there's going to be dip buyers before that pullback turns into anything material. Okay. Here's the Goldman Sachs positioning. If you thought, Merrill Lynch was just Merrill Lynch, here's Goldman Sachs positioning indicator. Okay. Now, granted, it's not a bullish signal. We're not coming out of a correction or a crash. All right. We are at new highs, but is this all in? You know what I mean? It's not all in. Nowhere near all in. Right? You could have made the case back in February. We spoke about that with the SPACs and the Kathy names going bananas, that it was dangerous then. We discussed that. I agreed with all you guys back then. I was more fearful than anybody else that it could weigh on markets. Somehow, some way it didn't. SPACs crashed, Kathy names crashed. The market had a little bit of a pullback. Somehow, some way. But you don't have that now. You don't have that now. Okay. So again, that's the risk to the upside, that this can turn into this, right? There's room for more buying. Okay. And as a market comes in, they're more prone to buy because they don't have too much to sell. That's the logic behind it. Okay. Yeah. Buybacks have been it. Buybacks have been the support. Like we said, guys, it's a rigged game, right? Buybacks have been all the buying. No, you're 100% right, Sherry. You want to see something crazy? Look. Oh, I gotta go all the way back. Hold on. I should have showed you guys there. But she's 100% right. The buybacks are what it's been all about. Look. Okay. All right. Here it is. This is it. This is it. And the amount of buying, this is now this is what, last week, right? Last week, yeah. So, this is every week, they're absurd numbers. And, it's been flipping between financials and tech. 1 week, big tech buying. Next week, big financial buying. God forbid there's a pullback in one of those groups. They flip the switch, they buy it all up. But there's definitely been a huge amount of buybacks that have been supporting prices. A lot of people think a lot of it is all buybacks that prevent the market from pulling back, and then you get those systematic funds to chase. All right. So, and those of you who are new, and it's good, I like to go back and review this stuff anyway, like the Goldman. Hold on. Like the Goldman note and stuff like that. Okay. And the other thing is fund flows. So you just have this, passive buying that comes in, the fund flows coming from retail into the major ETFs and stuff and the funds. Look at this. So this is now, what day is this? Is this the one I was looking for? October 24th. last 50, this is the biggest market structure dynamic for the year. For context, the prior best rolling 51 record was 250 billion. 4 times larger. Tina calculation. So this is just based on global equity fund flow. Okay, you can see, look at that chart here. All right, so the money just coming in passively. And then what I was looking for is the Goldman buyback, but I probably didn't even, I mean, the melt up. I probably didn't even title it. That's the problem. All right, but anyway, I want to show you something else. Hold on. Morgan. Okay, this is recently from Morgan Stanley's quant desk. Retail demand comes against the broader net supportive flow environment as well. Macro systematic strategies, that's what we were just talking about, these systematic funds, should have nearly 40 billion to buy at 10% realized vol in the S&P 500 over the next month. All right. While option dealers remain long gamma, buybacks, that's the crazy part. Buybacks, they go through a blackout period, right? We would remember we were talking about that. After earnings, they are allowed to buy back again. That's why the tech buyback on the chart is so low, because they report it. You know, the financials reported, they can start buying back their stock. So, you know, you got a lot of forces at play. So, but Morgan Stanley's talking about here is that you got these systematic strategies that have nearly 40 billion to buy. Okay, just again, you have an idea where the buying's coming from. Okay, because it's when it comes from individual players, right, getting bullish and chasing, it's concerning. But you know, they're not there yet. I'll force them in eventually. They're not there yet. What else? I wanted to show you one more thing. I'm trying to remember what the hell it was. Position. It had something to do with position. I can't remember what it was. Okay, if I remember, I'll go back to it. Let me see something. Nah, I don't know what I do with that squeeze thing, but melt up. All right. Anybody have any questions regarding any of this? I know we've been talking about this and pretty much giving updates. All right, but just giving you guys an idea of why we don't want to be concerned about any selling coming out of the Fed. We want to look to it as an opportunity. What do I mean by opportunity? We see the type of flow that we're seeing right now. Oh, that was the other thing. So you have, we look at Sharpie riffraff, right? So that's commercial hedgers and the spec money, okay? And what's really strange at the current time is that you don't have the quote unquote, the commercial hedgers, the sharp money getting long index futures, okay? As you would have thought, with a market at new highs, they are not going to take off their hedges and get aggressively long. I've never seen that, okay? But I've also never seen speculators basically just flat out capitulate like they have, and they have no exposure, okay? So that they're not net short as a whole, but they're literally have zero exposure across the board in regards to futures, specs. Okay, that's another thing you need to see go jump in the pool for us to get concerned and not look to buy pullbacks, right? Because if they're all in, hedge funds are all in, right? Systematic quants are all in. There's no more buyers left, and there are a ton of supply that can hit the market, right? So you can't just buy every bit. You know, now you have a situation where this market, again, it's a strange situation. Exactly. It's strange. Their market's at new highs, and they don't have the exposure that you would think they have. Okay. And let's be straight here. Up until recently, okay, hasn't been the easiest market. It's not like you could just buy anything and make money. It's been a really tough market, especially in other sectors. You talk to a lot of people, and over the last 2-3 months, they've lost money in an up market. Okay, whether they bought reopening names or from blue chip companies to speculative names, it didn't matter. There wasn't a ton of participation. So what we may see is we may see that open up a bit. It was almost like we were in a correction, believe it or not. Okay, but because the markets are rigged, the indices weren't showing it. Okay, but under the hood, there were bear markets all over the place. There were bear markets all over the place. All right, so we may be coming into a period where now, hopefully, we start to see outperformance from the underbelly, meaning the total opposite, right? The market held its own and went higher, but everything under the hood was disappointing and tough. Now we could see the opposite of that, where the market kind of, struggles to really get going to the upside, but on an individual name basis, yeah, you see some names going bonkers. So again, knock on wood. That's what I'm hoping we see coming into the end of the year. And if we do get a little round of weakness, guys, that's music to our ears. Like, that's ideal. That's ideal. Okay, that's not bad. That's ideal. This is what I want to show you guys. I don't know if you guys are going to remember the last time we looked at this, which is fascinating. Those of you who were with me years back, well, this will ring a bell. Hold on. All right, we used to look at a stock bond ratio chart, right? And basically, it tells you a lot of different things, but one thing we were really looking for years, and we never got it. I'll show you. Hold on. Okay. All right. So this is stock bond ratio, right? Every time you get a little bit of weakness, usually, except for this time here, there wasn't much weakness, but every time you get a little weakness, bonds outperform stocks, you get a buy signal. Okay, that's the green line. And when stocks rally and outperform bonds, when they get overextended, you get a sell signal. Okay, the buy signals are so much more efficient than sell signals. That's like everything else in this market. Okay, market goes more up and down. But what's interesting is, you see this here, how it's like an outlier. Okay, this was back in 2016. And what happened was you had a little bit of selling, couple days, no major pullback. Okay, and into that selling, you had a huge explosion. And what that was finally supposedly institutions getting involved, because you had a similar situation like we have now, where institutions were reluctant to get long equities for whatever reason. Okay. And then at that point, for whatever reason, they got long aggressively and started buying stock. And everybody looked at this as a sell signal. But you can see, how this thing stands out like that, right? Look at this. As opposed to just getting over the red line. And what was interesting right here on this turn, you got up to right here. All right. So if we do get a little bit of weakness, you might see one of these. If this is not here already, you might see one of these big spikes into a little selling. I think it was after the election. I think it was a little after the election. Or maybe a little, it had to be a little after the election. But I remember, you had a lot of like shorter term sentiment hot because the market rallied 2 days, just ripped. And then you had this. And a lot of people were talking about this like in a bearish way, not realizing what this was telling us was that institutional money was coming into equities for the first time in a long time, right? And, we've been looking for that kind of ever since, and we haven't had it. And that's full, full participation. You had crazy breath, you had, an everything rally kind of, I guess it says it best. Comey, was it that? Wow, you got a better memory than I do, Hyper. I don't remember exactly when it was. I just remember. I remember this because I'm not going to lie to you guys. I looked at this as, a contrarian at heart, and, I was concerned about it. But once I did a little digging just to find out what the hell was going on, it was all about institutions rotating in a big way from bonds into equities, right? If you think about it, institutions, just everybody in general, they were buying bonds forever. This is when that started to change. Yep. All right, so we have a really interesting backdrop. Like I said, I've said it before, and I know, you guys get tired of it. We do not want a sloppy melt up. You don't want that sloppy melt up. Okay, you don't want it. Trust me. What you want is these little gut checks from time to time, right? Especially off events or news where people, it keeps them on the sidelines. It keeps them on the sidelines. Because, like, let's say you get some selling because the dots move around out of this Fed meeting. And now inflation is a big concern, right? Think about are you going to have everybody jump in the pool off of that? No shot in hell, right? You get players and hedge funds probably puking even more, right? Trimming the little exposure that they have. And that's the lifeblood of these rallies. The time they come to an end is where, when the news is good, everybody has nothing to worry about, and then, and everybody's long already. Like, I'm trying to think of the last time before COVID, it wasn't like that. COVID was an exogenous event. And that's, I'm saying people were long, but they weren't that long. The last time we had an all in the pool moment, like, if I'm thinking that I remember, was the Trump tax cuts. You guys remember that? You remember the Trump tax cuts, how this market ripped all the way up until he signed the tax cut into law? Right, exactly. And like, everybody was all in. Yeah, everybody was all in. Everybody was chasing that whole entire rally up, thinking that, when the tax cuts go into law, the market would even go higher, and it was over. You understand? It was over. And the market rolled over, and you had nobody to buy, you had people to sell. So, those are the type of things we have to look for. And that's why we don't want, a good reaction or good news to come out of the Fed. The other thing we have going on here, and I think, what everybody's talking about, is the inflation play. And what people are starting to realize out there, and amazing how now they realize it, but that's how the game works, that if you're concerned about inflation, you own stocks. You understand? You don't sell stocks. If you want a position for inflation, okay, and you don't want to hold cash, you own stocks. So it's not a bearish thing. Fears of inflation, I guess is the better way to put it, creates buying of equities. And I think people are starting to put two and two together and realize that Yeah, you buy Bitcoin, you buy this, but what else do you buy? You buy equities. So I think that's playing a hand here too a bit, but we'll see about this inflation thing. Yeah, and that's the thing though, JD. Like, I don't think anybody's really positioned for inflation, for real inflation, and for good reason. We haven't had real inflation ever since I'm alive, you know. But if you do have real inflation, you got commodities basically go ape shit. And I understand there's been some big runs in commodities, and maybe they're just getting started. A lot of people are calling for that super cycle, but that's basically what you get. You get crazy moves, not what we've seen right now, like kind of what we've seen in lumber. But you talk about even the stocks go bananas. And it's been those inflationary plays right now have been tricky in commodity land. They've been tricky. They haven't been acting as bullish of late. So I'm not trying to make too much of it because they've had runs. Maybe they're just consolidating. Yeah, they were too crowded. That's a good point. Matt hit the nail on the head. They were just too crowded, right? And they're not going to just continue higher with everybody in. It's just not going to happen. So, all right, let's talk some names. All right, so we have an idea. For me, I'm focused on names. You guys know I love names. That's where all my focus is right now. And I just want to see what we've been seeing continue. If we see half of the type of action that we've been seeing, okay, and what I'm telling you guys is I wouldn't expect it because we had earnings season, right? That played a big part, and you had this lack of exposure in these growth and spec names, okay? That's what really was behind a lot of this buying. We're going into earnings season and nobody owned any of these things, okay? If we see anything like this type of buying next week, post-Fed, and coming out of the 2 big weeks of earnings where, you got to take everything with a grain of salt, I mean, it'll be crazy. It'll be crazy, because this action's been nuts. The amount of money getting thrown around, like, you don't even need to tell you. You see Tesla by itself, the amount of money that's getting thrown around in calls all day long, every day. It's insane. Sector sentiment here. Now, I'm glad you bring up sector sentiment because if we do see a continuation of this action, okay, it's not as important unless you're looking to make a play on a sector. Does that make sense? Okay, because like Matt is talking about GTLB, which is a really interesting name that caught some action today. Okay. Sector sentiment doesn't have as much of an impact on a name like that. You understand? So it's not in the playbook when they're focused on small cap individual name where sweepers are playing. Okay. This is more of like, if you're going to make a play on, Goldman Sachs, then yeah, you want to look at where financials are. You understand? If you're going to make a play on a big tech name or a big semi name, you want to look to see where it is. But you can see a lot of these sectors cool off and see alpha and individual name outperform while they're cooling off. Generally speaking. All right. But as far as sector sentiment as a whole, this is one of the issues here. And again, we've had a crazy rally, 13 out of 15 days. This thing should be off the charts. What's good, the last couple of days, as the market's been going higher, right? Again, if you look under the hood, there's been some cooling off, right? Energy got just too hot, right? The energy stocks, they're starting to cool. Okay, mining already starting to cool. Yeah, basic materials, not much, just started, but already starting to cool. Look at this. You remember this? I got deja vu. We were on this webinar trying to figure out what to own if we want to make a play on consumer discretionary, because it was the most shorted sector. You guys remember that? Now we know. Now we know. After parabolia, after the stock goes parabolic. You know, interestingly enough, Matt, Amazon, which we were thinking it was the other name, didn't do anything, you know? And that would have been frustrating. If you owned Amazon trying to make a play on that and it didn't work. Oh, Home Depot was the other one. You're right. Home Depot. All right. So that's why I'm saying keep an eye on this and this if we can get a little more cooling off here. Okay. Because these are already shorted. And if they cool off, they're going to be ripe. You know, they're going to be ripe. But look, like here, okay, biotech, right? You're above neutral, but let's say biotech was hot. That's got nothing to do with Labu. Zero. You understand? Labu can rip through IBB big biotech heat. So again, if we see a continuation of what we're seeing, you don't need to pay as much attention to this. Okay, these, for the market we've been in, we've been staring at this, and it's been on the money for us, right? As far as entries and exits. But you know, now if this continues, and we see the underbelly get lit up, you know, again, names that aren't widely held and crowded, this will not have as much of an impact. Okay. So, but yeah, we could use cooling off. You got biotech is the only thing that's got some room. Wasn't there another one? There's nothing else. My God. No, that's why I don't want to, again, the underbelly. That's why I'm focused there. You know, you stay away from this risk by doing that. Yep, exactly. All right, so let's look at a couple names. We talked about Labu, XBI. You guys were asking me about this ETF before we go into names. Caught some more buying today. Block. This thing looks good, huh? I forgot which one of you guys mentioned Block, but there's been some nice sweeper activity in this thing. Saw some more action today. Beto, that Bitcoin play, saw some more flow today. All right, so that's ETF land. You know what's interesting? Again, this is not early by no means. You guys know of the TQQQ guy, right? That basically got in at the start of the rally and every week, more than likely, has been rolling, okay? There was somebody right after him that played this TECL. I think it was Jans. And they showed up again today. Now, are you guys play this at all? I played this thing a couple of times. I know you play the TQQQ mostly. TQQQ, have you ever played this at all? Are you familiar with it? This is 3 times. This is one of those Direxion degenerate ones. 3 times. Okay? So, yeah. Honestly, for intraday stuff especially, it's worth keeping on your list over there with the TQQQ if you're feeling bullish. But look what they did today, okay? Now, more than likely, he's rolling or she's rolling those Jans. Look at these sweeps. They're beautiful. 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 Like I'll put a ring on this sweeper. That's how good looking this sweeper is. Look at this. Everything you could possibly want to see in a sweep, these things, except for into new highs after a move. Jan, okay, thank you, Matt. Jan 63s. Wow, that's helping me a lot here. Hold on. Okay, so I don't know if they rolled up those 63s, Matt. Okay, but look here, you see this? Okay, it looks like they closed those. Okay, so some of that rolls. Oh, there's the Jan 63s. October 25th. Perfect. Perfect. I wonder if they rolled up into the 65s. They might have. I got to check out and see if I can find out. Anyway, it could be a partial roll, but they definitely added wood. In other words, they added funds to roll. They put more money in. Okay, because do the math. I don't know what the final tally was, but you're talking about they bought 2,000 of these Aprils. Okay, and they were paying $10. Look at this. You know, they look harmless, right? These sweeps. Look how harmless they look. That's today's TEC. What's this? Oh, that's the volume. What did it end up trading? Do you have a tally there? Oh, I just X'd out of Twitter. Oh, come on. Oh, no, I didn't X out of Twitter, did I? No. So these are some of the sweeps today. Oh, look at this. This is the one Matt's talking about, right? October 25th. Nothing before that? No. It was at 67.81 at that time. All right. Anyway, they bought some more of this TECL today. Some good looking action. Today's tally. Let's see. I got it on my other screen. I'm just too lazy to go. Oh, I can't see that. What is that in Braille? I got it here. Hold up. I'm just curious to see what it traded here. Oh my God. Oh, so they moved more. Look, here it is. ATVI earnings. Yeah, ATVI. Probably buy it now. Here. Okay, so it looks like they dumped some more of the 65s and added some more. So pretty much same thing we would before the volume. All right, but that's, you know, when they're hitting TQQQ and that, I'm going to try to play this more too when I want to play tech, even intraday and stuff. All right, so what do we want to talk about? You guys want to talk about names, or you want to go through some of the top bets? I got to add a few names to this here. UA, there's been flow in the UA. What was it, earnings today? Earnings, right? Yep. That's the problem. What are we going to do? There's going to be a lot of this. There's going to be a lot of this, you know. What, you know, the thing to do, I've been talking about trying to do it with my guys. We seem not to put it into action ever. If you like a name going into earnings, especially if they've been like oversold, you know what I'm saying? You think there's upside. If you can make some money on the run up, you know, hold a piece into earnings. You know, a lot of times it's worth it. A lot of times it's worth it, especially on the better looking action. You know, but earnings are going to get in the middle of a lot of these things. Sono. There was some buying in Sono. Lucy was talking about this. She's a member over here. That was a really nice spot right here. But this Sono looks good. Oh, you got earnings. November. I thought it had earnings already. November 17th. Looks good. XLB. That's materials. What'd that do? Yeah, that had a little breather off a niner here, and that went higher today, huh? Look at this. That looks like it's getting ready too, right? Looks good. Looks good. You know, maybe we'll get some resistance here, right, and cool off some of the sentiment. And then you look for an entry. Probably better off even playing these ETFs instead of worrying, you know, on some of those bigger names. STNE. Oh yeah, that's. Are they Brazilian, John? Because I know the Brazilian fintech names got destroyed. Look at this. They all got beat up. So you got, oh yeah, so you got that Brazil risk, which, I mean, has there been capitulation there yet? Jesus Christ. That's what you got to worry about there, John. Yeah, they're probably, you know, longer term, right? If you have the patience, or maybe you want to add into them. Because this thing, when's this going to bottom, this Brazil? It's going to test the COVID lows? Well, here's a low here it could test. It's probably going to be a bounce in it. Mogo. I don't think I've seen recent flow in this Mogo yet, but that looks decent. Again, you got earnings there. November, a lot of earnings this week. See, names like this, you play an earnings run up, but for anything longer term than that, you know, further out than that, swings, I'd wait till earnings. I just wait till earnings. A net, oh my God, Christian, this thing is a beast. Look at this. There's been a couple of nice sweeps in this and that. Damn, now, you know, it's gone. Alcoa is tricky for me. You know, you do have a little bit of a pullback, which is good, but this is one of those commodity plays I'm kind of, you know, up in the air about. Yeah, for that reason, Matt. You know, for that reason. There is, you know, there are a couple plays that caught some nice action recently that aren't as crowded. Tech, CENX, which is like Alcoa. But I don't, these commodity plays are tough. They're tough. MTTR, you guys know I like that name. You know I like that name. CELH, that's a biotech, right? Wow, that's strong. So you got earnings coming up there too. You get a little bit of weakness. Oh, this is an energy drink? Ah, I didn't know that. Riot looks okay. And I understand why people like Riot, because it's kind of lagged, you know. But if you're asking me flow-wise, sweeper-wise, Mara, there's nothing even close as far as catching size, good-looking sweeps. Mara by far, and then Hut. But you see the difference. Yeah, exactly. Hut definitely better flow than Riot. Riot's more active. Like Riot's going to catch flow no matter what. It's an active name. But like relative to open interest and the type of action it catches, this Mara, I don't know what they like better than all the others, but this Mara catches bombs. Again today, bombs. I don't know. Tip, I really don't know. I don't know the difference between any of them. All I know is based off sweeper activity. And this Mara like catches $500,000 sweeps like it's nothing. Like it's nothing. So, and this hut more recently, every day, right? Matt, every day hut has bull flow every day. MSTR, but that's not a minor, John. Maybe that's why. That's not a minor. These are minors. And I think China kicking them out was like a catalyst. I think. Again, you're talking to the wrong one about this stuff. No, the sweepers, the shippers, I haven't seen anything decent looking anyway. Anything decent looking. Annie? I didn't know there was news. There's been some flow in this Annie. Is this this is not a minor, right? What is this? There's been some flow in this Annie. What else? What else? What other names? Matt, what was the symbol of the one you were talking about that you bought a little of? GTLB. This looks scary, dangerous. Good, in a good way. In a good way. So this one caught some sweeper activity. AI, again, nothing dramatic, but finally caught a respectable sweep. Okay, look at this thing. So risk reward down here, I think is more than reasonable. You know what I mean? And you got some wiggle room till earnings. Right? What is this? End of December? End of December. Wow, you got a lot of time for earnings. So this AI, there's two ways to play it, right? Like Silver in the room likes it longer term, and he wants to add if there's any weakness. For a trade, you want to buy it here, right? The sweeper activities today, you want to buy it. You don't want to ride this thing down to hell. You want to give it a little bit of room. Don't get me wrong. Okay, don't be too tight. But if this thing doesn't show momentum sooner than later, you want to get the hell out of it. For a trade, I'm talking about. Right? Longer term, it's a different story. Nvidia, I think the egg is hatched here. If you're fortunate enough to still be in it, I would lock in some profit and leave a piece. But this every day, Nvidia every day. Yeah, roll profits into an earnings bet. Exactly. You don't care if you lose everything you put into it. Because the other thing too, you got to understand is IV's jumped up here too. So you could take advantage of that by selling for some profit and roll like almost a lotto. If you get weakness, then what you sold, you could buy back. So it's kind of a win-win. But to start a new entry here, yeah, that's not what we want to do. Bros, I like. I don't know about up here. Was that up again today? Oh, a little bit of pull today. Bros, the play was here, Now this is, again, if you're in it, hold it till earnings, but buying up here, even with the sweeps, I can't do it. I can't do it. Like, that's what I'm saying, guys. Like, see Bros, when Bros was catching sweeper activity, nobody wanted to own it. Nobody. And now everybody wants to own it. So that's like this GTLB here. People want to see it explode, and then they'll start talking about it. So I'd rather own GTLB than Bros up here. Fresh, they have earnings today, right? Or no? When? Did it come out yet? Oh, down earnings. Okay. That's good. 43. So where's that? Right around, oh, here it is, the blue line. Ah. Yeah, if they come in tomorrow, you got another opportunity here. Definitely. Definitely. How was the earnings a debacle or no? Like, did they cook the books or they just missed? You know, just see nothing catastrophic is in there. This path just doesn't want to go. It's going to go. What was that sweep? What did they play with that sweep path? What was the month? February, was it? ME. I bought a little equity, not a lot though, Ray. I bought a little equity just to have some. But not for a trade either. I'm going to try to like tuck it if I can. Fed 55s on the path. And the only reason, Ray, is because this happened already. You know what I mean? Like I do. Let me tell you what I did with it. I traded it, and then I do something I never ever do. I bought a little piece higher than where I sold it. But, you know, for try to forget I own it type of thing. But if you want to size reasonably into it, I would probably even wait for maybe just a down day if you could get. Because this is a big rip already, you know? E2, I own that. Again, not for a trade, but kind of just sitting in it. But yeah, I own this E2. I like this E2. You know, I don't for a trade, I don't know about time frame though. You know, there's not one sweep that stood out. It's more of longer term positioning that caught my eye in it. But I do like it. And if I'm not mistaken, Elliot is behind this, right, Tippa? SI, that was a monster. I missed that one completely. Jesus Christ. It's funny how the ones I missed just explode. I was interested in this. I was definitely interested in it. I was definitely interested in it. Now, if you own it already, good for you. Here, you got to wait for a little breather now. But this looked pretty good here, right? Didn't this look good here? Top holding of block. Interesting. Interesting. Yeah, Ryan, there's been so much sweeper activity in these things. I mean, this one's the laggard that's been catching flow recently. This one's been absolutely tattooed, plugged. You know? Later, P. Have a good night. But you know, these are late now. I really don't know. I'm being honest. You know, I really don't know. You got a little pullback in this LCID. You know, flow wise, kind of plug and LCID are probably the top two flow wise. LAC, I can't believe how that thing went. Look at this. Wow. Some big moves in these things, man. Yeah, First Solar caught some nice, good looking action too. Yeah, maybe. It's definitely possible. These EV plays are hot. Again, I'm more looking for just regular underbelly tech rather than EVs now because they've been so hot. They kind of do to get a little gut check there. That's what I would probably wait for, Rye. Wait for some selling. If you like them, you got to like them if they sell them, and that's where you look to take advantage. Because if the trend's going to continue, that's where the entries are going to come from, Rye. But be careful chasing now those things. Yeah, this looks interesting. I don't know anything about it. It had spec action today. Yeah, IDEX is the other one. This is more speculative action, though, guys. These are roll the dice type names. But yeah, IDEX and sends definitely an uptick in spec action. DPZ, let's look at that. This caught a nice sweep. Yeah. This caught a nice sweep. Definitely. And looks good off that pull. Definitely looks good off that pull. And there was somebody was bullish on it. I forgot what house, what bank. Intel, there's been, who the hell wants to buy Intel unless you're just going to tuck it away? There's got to be nothing out there for me to really get jumped up on Intel. But, at this point here, it's not the worst spot. Anybody like it? Intel? Yeah, well, Febs. They're buying Febs. That's where the accumulation has been. Are they? The meme stocks. I still don't know what the hell that means, but BB had some flow, a lot of flow today. Intel insider buying. Yeah, you're going to make me buy Intel? Because you know what's going to happen? If this Feb dude comes back, I'm going to have to buy some Intel, and I'm going to curse myself out. Meme stocks, IWM. Yeah, good point. Here's one of the, this is, I think, was the biggest order on the day. They bought, I think it was 10,000 yesterday. It's legit buying. Legit buying in Intel. Caterpillar, they're better than nothing, right? They started buying leaps. Well, Jan 2023 calls in Cat. They piled them up today. Right? Like here's another example. This is not euphoric by no means. And, you think about it. Cat's a stud. You had a huge move. This is just totally normal. Maybe you want to wait to see if they buy something closer, time-wise. 6,500 from yesterday, 6,500 Intel Matt saying from yesterday. And they bought probably another 3,000 to 5,000 today. What do you think, Matt? Can you buy it? What the hell? That's not mobile. What's going on here? Are you kidding me? Look what I did. Oh, here it is. No, oh, you're right. 6,500. 14,000 weeklies. Yeah, that's what you got to do. You got to buy it and just forget you bought it. Don't even torture yourself. But you could also get lucky here, Matt, because of the spot and get a little bit of a move off of this. Yeah. Because look, a trade even back to that 54, 55 area. You know what I mean? Yeah, Feb, maybe Feb 2024, right? No, but what you could do is we could buy Febs, and if we catch a move, then roll out a piece with a lot of time, like you're saying. If you're going to try to catch a bigger move, because you're right, you need a lot of time. It's just hard with all the names that are out there right now. What Intel, what it can rally in 6 months, you can find a name that could do that in 2 days. Yeah, you can. This is ranchero style, exactly. Exactly. All right, what else we got here? This was an interesting tweet too. LFUS. Look at that breakout. What the hell is this? LFUS. Well, whatever it is, we'll probably, it's two, what is it now? It's $313. It'll be 500. We'll be like, oh yeah, LFUS. Remember that? Here's the Labu sweep. That's a nice sweep. Here's the AI sweep. Not bad. There was dip buying in this thing, got destroyed today. So you see what's going on? This is, we're already starting to see it, right? Post earnings action, right? You may not like these names yet, but the list is going to grow. Okay. This thing was a massacre today. This is a COVID play. Probably you probably wait and let it digest before catching the knife here. But look how much time, April 1435s. And they're likely going to add to it. But again, I'm just making the point more of, you don't need this. You know what I mean? But we're already starting to see post earnings action, what we were talking about. As this week moves on, we're going to see more and more. As we get into next week, it's going to be even better. The skies clear up. Energy name to keep an eye on. There's so many energy names to keep an eye on. You don't, I mean, RRC is one they've tattooed. You guys know. Fang. Yeah, Fang. Oh, that went to new, oh, that had earnings today or no? That went to new highs today. This thing's a beast. Tons of flow. DVN, how much sweeper activity in this? This is at new highs. There's no breather. Look at this. I tell you where there's a breather, and this thing can boogie when it gets hot. CPE. This thing could pick them up and put them down when it heats up. Energy name. You got earnings coming up. This is the definition of energy underbelly play right here. There was another one, I think it was more nat gas. Oh my God. SM, look at this. So you see, like, energy cooled off. These smaller underbelly energy names, they don't give a shit. Look at this thing go. So keep an eye on this CPE. If it's down off earnings, even more so if you're interested. You know, the other ones I just showed you, they just keep going higher. I mean, there's no dip. But RRC a little dip, and they bought it today. All right, what else we got? Anything else? Any other underbelly plays out there? Underbelly plays. So in other words, that's a good one. CVE is a good one. They have earnings coming up. Oh my God. When did this all happen? I lost track of these guys. STEM. Oh, that's nice. This is a SPAC, huh? I like the setup there. I like the setup. This is more of a spec name, PSFE. Does a lot of spec action, pay safe. And you got earnings coming up here. Another name you guys seem to like, has had a lot of flow, has earnings coming up. Open. Down? Earnings? What happened to Open? Oh, Zillow shit on it. That's right. What a debacle. Fucking Zillow. Oh my God. Poor Open. Menagerie. Yeah, it might be an opportunity, but you got earnings coming up. Damn it. Somebody just mentioned a good name here. Hold on. CAH had a nice flow today. They have earnings coming up. Nice spot though. But this is molasses. Like, you Intel and this, you're holding this when the underbelly's hot, you'll be talking to yourself. You know what I mean? You pull your hair out of your head. PG, that's another one. Like a boomer stock, Lucy called it. She's right, but sweepers clean up in this name. They were buying 2023 calls in this. And this is a nice looking setup too. Look at that. I think they bought the dip here last, if I'm not mistaken. Rig. Yeah. Like, this is the crap of the crap. You know what I mean? Like, this is, when you're buying rig, you're betting that the energy trend is so hot that it's going to lift all boats. This is, yeah, exactly. This is like lotto ticket, Like, if you really want to make a bet on energy, the last name you're buying is rig, all kidding aside. You want to buy studs, Devon, Apache, APA, you want to get a little more aggressive, speculate, CPE, AR, those guys. Yeah, Fang had earnings. I saw that. That's where you get the bang for the buck if you're right on energy. Rig is lotto type. They got dead out their eyeballs, Rig. I don't even know how they're still alive, to tell you the truth. Oh, you know what? I saw a little OSTK flow again today. Look at this guy. This guy's getting ready to bust out. Anybody in this thing? I know a couple of you traded it off the sweep the last time. Hold on. I think I even forgot to mention it. It was in the middle of a flurry of action. Hold on. Keep an eye on OSTK on any dip. If you can find an entry, it's probably worth a shot, this OSTK. Let's see here. What? Let me ask you a question. Twitter, you got to keep refreshing to see tweets. That would drive me insane. Here's OSTK, the action today. Oh, TweetDeck. I know a lot of people tell me that. This thing's alive, OSTK. I'll post the open interest in the morning to see how much of it stuck. You got Bova gassed up on it too. I got a feeling this thing's going to go. How do we get in it? I can't believe $100 in this thing. Steven, you remember this, right? Weren't you the one who owned it, Steven? Back then? You're still in it? What do you do? What do you, like, Vicodin up during market hours? Xanax up to hold on to things? What the hell? How do you still own it? Jesus. I remember he was in this run. I bullshit you not. I remember it. I remember talking to him about it. He forgot the password. Oh, you sold something to the rip? Good for you, though, because I think it's going again. Again, market permitting, right? We could get hit with a nuke tomorrow. But I think if this market just hangs in there, this thing's going to go. I really do. You know, they had legitimate earnings. You guys know that? Like, they destroyed earnings. Look at this. Yeah, I didn't realize. Matt, because first it was like a furniture place or something. Then it was Bitcoin. Then the CEO got into trouble, remember? And now what do? And then they were doing something else. I remember. Blockchain shit. Path and AI. Yeah, Dustin, honestly, both those names, I think, especially with like a Path, it's time, you know? Like I give an example. This is what I compare like a Path to. The ZI. Do you remember the ZI? Like this is what I compare like a Path to. Okay? This ZI was a reputable IPO, legitimate IPO. And just for some reason, just couldn't find its footing, you know? And you know, it looks easy on the chart, but it just took a lot of time. And now look at this thing. Looks really healthy. So, you know, I don't know if I put AI in that category, but more, definitely a Path. Definitely a Path. So there you go. You know, Nick, right? The chart doesn't even do it justice. It looks a lot easier on the chart all the time. Torture, right? But it's legit. It's legit. So patience is a virtue in this game. You guys know that. What was there? A couple more names and we'll wrap it up. Starting to lose my voice anyway. Somebody had a decent name. Oh, Core. Wait, where do I know Core? Oh, I know. It caught action today. Earnings, right? Looks like down a little. If they buy it tomorrow, this looks really interesting. Really interesting. This is tech underbelly. Yeah. Software guys. This looks really interesting. Online school. There's another underbelly name. This, without a doubt, blend. I hope it does what Core did. Exactly that off earnings. You know, you got earnings here. That's the problem. Core and Chegg Tech. Oh, they do what Chegg does? Core? Oh. Peter Thiel's behind it? Oh, maybe that's okay. It's good to know that. Yeah, this blend core, nice sweeper activity May calls. So some time. But this looks good too. This looks good. So I'm kind of hoping it, you know, doesn't go gangbuster off earnings here and we get a chance to look at it post earnings. Beyond, this thing caught some sweeper activity, but never really had a couple up days and then just stalled. You got earnings coming up here though. Oof. There's a lot of, yeah, Spot's not bad at all. Spot's not bad. But there's enough names, man. Especially if this action continues, there's enough names. But all these names you guys mentioned, you know, OSTK, watch for a dip. You know, some of these energy names, watch for a dip. You know, that new stock from today, GitLab, whatever the fuck his name is. There's a lot of stocks to keep their eye on. We got literally tomorrow's the Fed. We get that out of the way, and then I'm telling you, once you get through this week of earnings, you'll see that it's like the clouds clear out, the sun shines again. You know, this is a big week of earnings. A lot of underbelly names, you know. You're going to see there's going to be so much post-earnings flow if this continues the type of action we're seeing. So much. Though, listen, if it does, it's the most obvious breakout out there. You know what I mean? But it looks it. Like usually here, from my experience, and this day and age, this market, forget my experience is as useless as forget it. But what usually happens when you get something like this, okay, that's pretty obvious to everybody, okay, you get either a break and then a shake, okay, or you get a break and rip, and then that rip is short-lived and the whole market comes down. You know what I mean? A break, in other words, everyone gets in off the break. They get super bullish because the Russell finally broke out, has a few up days, maybe an up week, and then falls apart. So that's what usually happens when it's an obvious, think about it, right? The breakouts that are usually the best are the ones people are scared to buy. But not to make excuses, this market's different. You got a rigged game. You got a rigged game we're playing here. Yeah, the ones nobody believes are the ones that really, really, because then you get everybody chasing late. See, here, you're getting everybody looking for it now. But I will say on the bullish side, you saw hedge funds, how short they are. They might try to hold it down, but if it gets away, they got some pain. Yeah, they're short. They've been short forever. They've been long S&P 500, short Russell for a long time. Yeah, exactly, Hussein. Exactly. What I would pay attention to is on, we don't have much to look at down days, but on the down days, what happens? If this is a healthy breakout, when you get that shake, they're going to inhale that weakness. Did you see how they inhaled the weakness off the Amazon Apple miss? They snorted up that red, right? The selling in the markets. Like it was a gift from the gods. So you look, you get more evidence on the days of selling than into strength. Into strength, you get force buying, squeezing, right? Chasers. But on the down days when buyers step up, it tells you, the real health behind the trend. So it's going to be interesting. That's why I want to see the market as a whole post-Fed if we get a little selling. So we'll see. Tomorrow's a big day, though. It's a big day. Again, not necessarily what the Fed's going to do, but how sweepers react, the price action, all that stuff. But there could be clues in the flow. Remember the TLT put sweeps in Jackson Hole? You guys remember that? Remember they annihilated those puts? That was over here, right? I think so. That was right the day of Jackson Hole, I think. So we'll keep an eye on the sweeper activity, see what the hell goes on tomorrow, and more importantly, post-Fed. Anybody have any last questions before I run out of saliva? Good? All right. So keep your fingers crossed. Hopefully this type of flow continues, regardless of what the market does. And we could talk some names. I love talking names with you guys. Yep. Thanks for stopping by. Enjoy the night. Get some rest.